Okay, folks, welcome to Market Wrap for the 23rd. The probability of a Fed rate hike next week, pretty much zero. December, odds favor no rate hike in December. And now we're going to start looking at January. Odds favor no rate hike then. I think the pause is in full effect. And this is the reason why I want to start accumulating a position, call option position on gold. We'll talk about the other reasons in a moment. And when I say gold, I'm meaning the GLD, call option position on GLD. Now, what this is implying is that the Federal Reserve will no longer raise rates. On Thursday night, when we do Thursday night stock charts live, we'll see whether or not they've continued to roll off debt off their balance sheet, or if they become less aggressive with the rolling off of debt. And the reason why I say that is because somebody was in there buying bonds today, long-dated bonds, allowing for the 10-year yield to really come in heavy. Now, the yield curve is down on the week so far. Obviously, it's just Monday. A lot can happen here. Now, for the 10-year yield, a major reversal day. Overnight, we hit a 5 handle on the 10-year. It's not reflected on this chart because this is only reflective of regular hours trade. But we did hit a 5 handle and reversed with a bearish engulfing. And I do think that there's more downside to be had here. Now, tomorrow, what we'll be looking to do is to potentially, on a retest of $84 per share, is to buy some TLT or to sell premium. The tip market, it caught a bid today. And when I see this higher low and this potential setup for a move higher, you need to start thinking about gold, because what is this telling you? It means that investors are worried about inflation and they're going to go buy tips. And apparently that's what they're doing now. This is in the consolidation range. And this is a classic case of when I say you're going to need to wait for the higher low, because that appears to be what we're setting up for you here. This was the rip, right? Not the bottom. The true bottom is here with the higher low. A bottom is a partnership. The first low, the higher low. Then you get your breakout above the pivot point at 103.85, and then you have your new rally up higher. So this is forming very nicely a bottom. Now, the dollar is the other reason why we want to start looking at gold. The dollar really broke down hard today. It broke down last week below that lower band of support. This week it was a continuation breakdown. So this is a very bearish chart. Good for the gold mining stocks, good for gold, but more for gold, more for silver. I'll go over the reasons why not for the gold mining stocks just yet. Maybe it is, but perhaps we could wait a little bit longer. The VIX, big reversal day today. Still bullish. It's in an uptrend, but a reversal day nonetheless. Dow Jones Industrial Average clobbered today, closing down over a 0.5 percentage point and closing at the lows of the session. They tried to rally it. It was a clear and defined rejection of that rally. All these moving averages are going in the wrong direction. Volume rose. Now, the Pimp Mac Daddy of sell-offs today was the Dow Transports. This was down nearly 1.5%. This should rally soon. We broke down below this lower band of support. We could probably head down to 14,100. Look for a rally off of that level. Volume very heavy. The S&P 500, note where we found a bottom today, right at the 50-period moving average. We bounced. Still closed lower, but we bounced. We managed to go positive. Daily view. So we managed to go positive. They could not hold it. We closed down below the 200-day moving average. Can we rally from here? I don't know. This is a pretty ugly chart. I was looking at the weekly chart more earlier. I mean, here's our upper band of resistance, our lower band of support. I think they need to take this down again. They did hold 4,200. I think they need to take this down again and get a bullish reversal day. Let's check out the close. Yeah, not a great close at all. You really want to see buying into the close when you get a sell-off. We didn't get it. So I'm very happy that we're flat on the market. Triple Qs. Now, it did manage to close positive. It respected the lower band of support. In fact, we closed down below it on Friday, managed to close back above it today. So what I'm hoping for here is a rally up and into the 20-period moving average in green, which would coincide with the upper band of the downtrend channel. What do we do then? We short. And you may be saying, wait a minute, yields are coming in here. Isn't that a little bit dangerous? It could be. But remember that when the yield curve is steepening, it's an indicator that we're at or in recession, and yields drop in anticipation of a Federal Reserve rate cut. And just because they cut rates does not mean equities rally. It may rally for a day or two, but it's very, very short-lived. Volume today was very good. Let's check out the close. And they sold it off into the close. Now, much like what they did with the S&P 500 on a weekly time frame, they did the same thing with the triple Qs. Now, looking at the weekly chart of the triple Qs, where they found support today was right at the 350 mark, 351 mark. And that represents the lower band of the Bollinger Bands in green. Now, where we're looking to short is right at around 361, 362 per share. So we're hoping for a rally. And if it does happen, it's going to happen very, very quickly, very, very aggressively. You're going to think you're in a new bull market for a few days. All of a sudden, they pull the rug out from underneath the bulls. Small caps. Now, what if we're wrong here? What if the markets shrug off this recent bear market, attributed to October seasonality, and look forward to November seasonality when it's a great time of the year for equities? That's a very, very reasonable concern if we're looking to short the market. What will I be looking to buy? Well, if yields are coming in, I'm going to be looking to buy the small caps because they're headed for a 3-month sequential rally higher if you're using seasonality. The problem is, looking at this daily chart, we broke down yet again below support, 52-week support. Let's go to a weekly view to see where we might have some support here. I'm looking at 162 spot 62, excuse me, my voice is going, on the IWM weekly time frame as being an area at which we may want to look to open a position and overshoot to the downside down to 159 and change. That would be very, very welcome. So on any bloodbath in the IWM, we're buyers because what we need to do is put a sell-off into context. Sell-offs in general occur in channels, whether they be uptrends or downtrends. So here's your upper band of resistance, lower band of support. We're right near, we're in stone's throw of the lower band of support. Stochastics are very, very oversold. So we're approaching an area here where it's becoming interesting to open up a long position. But I would really prefer to wait until there's blood in the streets. And then what I would like to do is buy call options, put on a call spread. Options are cheap. Now, one thing I want to share is this. Here is my version of the V2 version of the squeeze indicator. I'm going to add on the standardized version of the TTM squeeze from Thinkorswim. And note the black dots here on my version. Note the black dots when the blue bars were rising and now the red bars are declining. If you would have had these blue dots, you would have realized that this is a weak uptrend, whereas the free version didn't tell you that. The green bars said, buy, 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 while my black dots are saying, hey, be careful. This is a fairly weak uptrend. Now, the same could be said for this downward move where the black dots are appearing yet again, but on the green dots, you're seeing, or on the green dots on the red bars, you're showing that there's a strong downtrend. My version is saying it's suspect. And the fact that we closed above the 5-period and the 9-period moving average leads me to believe they could rally this, but can't put all your eggs in one basket. That's the trick when you're using these squeeze indicators. Sometimes you get false positive and false negatives, meaning it appears as though you may get a rally when in reality you're only getting ready for a breakdown. It was a setup. It was a head fake. a bull trap, if you will. We could be seeing a bear trap here being set because you have people out there that are using this indicator looking to get short. Yet my version saying you may be right, but be careful. Tread with caution because it's a weak push lower. And this is the after hours session. So it's on thin volume. But this is just an illustration of what I'm talking about between the difference of the free version of the TTM squeeze and my version of whatever I'm going to call this. I have no idea yet. So more to come on this. Now, getting back to the closing price action, I personally hope that we break and we move lower, get down to that 159 mark and be buyers. The banks, daily chart, crushed, down over a half percentage point. We're now below the October lows. And this just goes to show you can't get lured into a false sense of security when you get these rips in a bear market. Because what took 11 days to build took only 4 days to take away. Technology closed up today along with the Qs. Very similar price action as usual. Staples, daily view, broke support, volume strong. Discretionary names, leaning into the third standard deviation Bollinger Band. So I wouldn't be surprised to get a pop here. DBA, up day, a little bit of stalling action though. Not much to talk about. Energy really got walloped, down over 1.5% on the session, and oil came in as well. So here's oil. That was down nearly 3% on the session. So what can we conclude here? We can conclude that the fears out of the Middle East may be subsiding some. You wouldn't know it by the news, obviously, but the markets are forward-looking. And you could also interpret this as an expectation that the economy is slowing. There won't be a need for as much oil. Now, back to Boyle. We've resumed these very, very tight and orderly consolidation days after 2 days last week, which were pretty bearish. This one here, which is a breakout day, but we faded off the highs. And then you had Thursday, which was not a great day. We've seemed to have begun to normalize yet again. But I'm not ready to add more here because I'm not ready. Stokes are still trading down below 50. We know that rallies tend to fade. We don't want to get too enthusiastic. On a weekly view, we do have a squeeze that's getting ready to fire off here. Are we 100% convinced that it's going to be in the direction that we want? No, but the probability is that it will move up higher. But this squeeze has been firing off ever since July, so we want to stay small until we get a clear and defined breakout. And that would be a breakout above this is the spot price, not Boyle, of let's call it $3.47 on the spot price. Now, if we begin to see stabilization before that and a threat that we may break out higher, I could add more. But taking a look at this daily chart, we flashed a sell signal today, 30-minute chart. So the jury's out here on nat gas. Not ready to go adding more here. Gold, a down session today. We knew it was going to happen. Volume was strong. Let's check out the GLD. A beautiful rip here. I can't buy the options because they're just too expensive right now. So we need to allow for that IV crush. But with the dollar breaking down, it may not happen as soon as I would like it. So more to come, GLD. Nugget. It pulled back, retested support, and bounced. A good day. Now, here's the thought process. If the markets rally here, in particular the high beta stocks, the Magnificent Seven stocks, money will rotate into those names. Fear will come out of the market. What does that do for gold and the gold stocks? Well, right now they're driven by fear. So while today was in my book, a bullish day, even though we closed down, it doesn't mean that we're not going to probe these support levels a few times more. Let's check out the weekly chart. Yeah, looking really good here on the weekly chart. I know I'm being stubborn here. I'm aware of it. I'm just worried about the equity market rolling over and taking the gold stocks down with them. GDXJ, very good price action. A down day, yes, but it bounced off of the 50-day moving average. I would like to see a higher low on these names. Silver, a down session, down 3 1/3%. Light volume. Silver miners down as well. Nice little bounce. Emerging markets broke down new weekly lower lows, avoid. And take note how they broke down with a weak U.S. dollar. Hawaiian Electric down nearly 1.5%. The 50-day moving average is caught up with the share price. PepsiCo, which we have a strangle, they took a lot of premium out of that option or those options today, which is good for us. We're still down on the current strikes. So as soon as we are able to scratch this trade, I'm going to do so. LABU, which I've added back onto our weekly or daily market wrap list, somehow or other fell off. I literally lost track of it. I don't have a lot of this. So LABU, wow, I can't believe this is down $2.50 and going lower. I got to wonder what components, I'll do the research on it, what components are in this ETF. I mean, there's no support below. So I can't be a buyer. I think we move lower. So we'll hold it. Not ready to go buying more. All right, so today we traded Tesla. And I want to talk about this trade for a moment. And it was a really good day trade. And I did not want to carry it home overnight. So we bought the morning sell-off. So how did I know where to buy it? I knew where to buy it because it's exactly where the 250-day moving averages were. You know, technically we traded down below that mark, but the probability of closing down the first shot was improbable. So I just went in and I bought the sell-off. And it was a pretty big position as well because I kept having the average down. And we got the bounce. But I think it was wise not to carry it home. There wasn't a great setup for tomorrow. They sold it off in the afternoon. Let's go back to the daily chart. They closed at 212. 210 is critical support. We are or did lean into the third standard deviation Bollinger Band. Let's go to an intraday view. How did they close this? 15-day will do. 15 minutes. If they drop this again tomorrow morning, I'll be a buyer again. We have a couple of support levels below, 205, 207.50. We'll look for the higher low. If they rip it through the day's highs at 216.11, I may carry some shares overnight and sell some covered calls going into Friday. Now, a chart I haven't discussed but wanted to was SolarEdge, where we got out of this one in advance of earnings, and thank God that we did because it had a real gamma event. Anybody that was selling premium on earnings had their faces ripped off, and I'm glad we avoided that trade. So here is SolarEdge. The options are still very, very expensive here, and we have earnings which are in the rearview mirror. We need to be sellers of the puts, I think, on SolarEdge. Let's check out the monthly view in terms of support below. Looks as though we have some historical support where we bounced last week. I think that we want to sell premium down into around that $60 per share mark. If they're going to pay us, we'll go for it. So more to come on SolarEdge tomorrow. Probable trade on SolarEdge. That's it, folks. Have a great night. Talk to you tomorrow. Be well.